everyone. Welcome to Financial Analysis and Reporting. So under the module, we have 4 units. And under the first unit, we have 4 topics such as Financial Analysis Preview, overview of financial analytical tools, and then we'll also have types of financial statements. And later, I'll also be discussing the elements of financial statements. So first and foremost, ayan, let me walk you through financial analysis and techniques used in financial decision making. So what is financial statement analysis? It is a method of reviewing and analyzing a company's accounting reports, such as your financial statements. So that would include your 4 basic financial statements, your income statement, your balance sheet, your cash flow, and your statement of retained earnings or changes in equity. For the purpose of assessing the past, present, or projected future performance and condition of the firm. It is not just important that you know how to classify accounts in your financial statements and how to prepare financial statements. What's even more important is how you analyze it, okay? How you interpret your financial statements, and that's the core of financial statement analysis. So there are 3 broad categories of financial analysis. So first, we have profitability analysis, risk analysis, and of course, cash flow analysis. When we talk about profitability analysis, of course, stakeholders such as management, creditors, even employees, local government agencies, they would like to know how profitable the business is. Especially the prospective shareholders or investors of the company, they would like to know if this company is profitable. So over the years, okay, nag-i-increase ba yung sales or net income of that company? Is it worth investing that money into this company? So it's basically an evaluation of a company's return on investments. And it also focuses on some of the reasons for changes in profitability and of course, yung sustainability ng earnings. Okay, next, risk analysis. Of course, a risk analysis, this is naman evaluating a company's ability to meet its current and non-current obligations. We're talking about short-term and long-term obligations such as yung kanyang mga utang. Okay, so there are 2 ways for a company to raise its capital. Pwede siyang mangutang and pwede rin siyang mag-issue ng shares of stocks, or the company can do both actually. So it's very important that we know how to analyze the risk and return whenever a company enters into reinvestments, enters into another business or any other endeavor. So it's basically finding a trade-off between the risk and the return. So gaano ba ka-solvent yung company? It means to say, does it have the ability to pay its current and maturing obligation? Or gaano ka-stable yung company? Kaya ba niyang magbayad ng mga utang just in case the company would opt to borrow money? Okay, so sa risk analysis, papasok lahat ng yan. And of course, we also have cash flow analysis. So basically, this is an evaluation of how a company is procuring and deploying its funds. So it talks about the cash receipts or cash inflows of the company and also the cash disbursements or cash outflows of the company. Okay, sa cash flow analysis, gusto mong makita yung changes dun sa mismong cash account. Bakit at the end of the year, eto na lang yung cash natin o we have more than enough cash? What are the business transactions that could provide us insights into the company's cash? I'm sure you have already learned from your financial management 1, the primary goal of financial management or financial managers. All right, so it's basically the same with the primary goal of financial analysis, which is, first one, it's maximizing shareholders' wealth through maximization of stock price. And secondary is the maximization of profit or value maximization. Now, these 2 are different. The first one, it has something to do with perceived value of the company. What is the market value of the company? Companies like Jollibee, PLDT, Smart, Globe, okay, Banco de Oro, BPI, Universal Robino Corporation, these are publicly listed companies and tumataas ang presyo ng kanilang stocks kapag mataas ang perceived value, okay, dun sa kanilang company. So any good news about the company, wonderful developments about the company, when the company is earning, okay, when it's being managed well, gumaganda ang perception ng mga tao, So, mas nagiging attracted, okay, para sa mga tao na bumili ng stocks ng mga companies na yan. Of course, you'll be future financial managers or CEOs or president of the company. Therefore, your goal is to make sure that you are maximizing the wealth of your shareholders or the owners. Okay, how? By maximizing stock price. And secondary is, of course, maximizing profit or value maximization. It has nothing to do with the market value of the company, but it's basically has something to do with the income of the company as per accounting records. We're talking here about the intrinsic value of the company. Kumikita ba yung company or hindi? If kumikita yung company, then it could distribute dividends to its shareholders. So, for example, if you are a shareholder of a company, pwede kang kumita hindi lang dun sa pagtaas ng presyo ng stocks na binili mo, which is under number 1, but you can also receive dividends kapag naman kumita yung company. If merong net income, especially if it's unrestricted retained earnings. All right? Okay, now let's proceed to the different analytical tools. So, paano ba tayo mag-analyze ng financial statements? There are tools that can help you do that. Okay, so we have at least 5. So we have comparative financial statements. We also have common size financial statement, ratio analysis, cash flow analysis, and valuation. So for comparative financial statements, paano mo ba ina-analyze ang financial statement ng company? So in this case, Bartlett Company income statement, as you can see on the screen. So this is an income statement. So you have your sales revenue, less cost of goods sold is equal to gross profit, etc. So makikita mo, merong comparison. Ano ang kino-compare? Yung year 2011 versus that of year 2012. So one way for you to analyze a company is through comparative financial statements. You are basically comparing one year from the other, or you can also do 5-year comparison. For example, you will compare the sales revenue in 2011 versus that of 2012 versus that of 2013, 2014, and 2015. And you would like to know if nag-i-increase ba yung sales revenue? Okay, ilang percentage ang growth ng sales revenue over time? Okay, so 2011, for instance, the sales revenue is $2,567,000. If you compare that with 2012, what did you notice? Nag-increase yung sales revenue to $3,074. Okay, is that good? Well, generally, that's good. But definitely, kailangan din ma-assess muna ng company if yan din yung sinet nilang target. Okay, for example, if they set 30% should be the projected increase, then, okay, yung difference ito, hindi pa to umabot ng 20%, so hindi nila na-hit yung kanilang target. Okay, so generally, it's good, but as far as the objective of the company is concerned, hindi. Okay, now let's also take a look at the net profits. As you can see here, from $148,000 to $231,000, nag-increase ba yung net profit? Diba? So dito pa lang, pag nakakita ka pala ng financial statements, ma-assess mo na agad kung merong growth yung isang company. So that's comparative. There are actually 2 techniques that you can use in comparative analysis. It could be year-to-year change analysis or index number trend analysis. Merong trend. Parang consistently ba pataas ng pataas yung revenues of the company? Comparative financial statement is also known as horizontal analysis. Kasi period to period ang pinag-uusapan natin. Horizontal. Diba? So, 2 period, 3 periods, or even 5 years, you can compare that. Now, let's proceed to common size financial statements. It's also known as vertical analysis. Okay, so kung yung horizontal is year-to-year or multi-year basis tayo, so vertical naman, top-down yung approach natin. Paano pong top-down? Okay, so yung net sales mo, this is an income statement, the net sales is actually converted into 100%. And you would like to know how much is your cost of goods sold in relation to your net sales. What is the percentage of it? Okay? Yung net income mo, if you compare that doon sa net sales mo, magkano yan? Okay, ilang percentage yan? So to get the percentage of your cost of goods sold, okay, so 158,000 divided by 320,000, that's 49%. to get the percentage of your gross profit, 162,000 divided by 320,000, that's 51%. So dito pa lang makikita mo, dun sa benta mo, na 100%, 49% of that yung cost of goods sold mo or yung pinuhunan mo. And yung natira, that's 51%. That means to say, if 100 pesos ang naibenta mo, 49 pesos, alam mo na agad, yan yung pinuhunan mo, and may matitira sa'yo 51 pesos. But of course, hindi pa yan yung pinakakita ng company because meron pa yung mga OPEX or operating expenses and other expenses. So the net income, ayan, if you look at the net income, 55,000 divided by 320,000, what is its percentage? Pumapatak, 17%. Alright? So it's basically saying na kung nakabenta ka ng 100 pesos, at may puhunan kang 49 pesos, may gross profit kang 51 pesos, pero kung i-deduct mo lahat na ng mga ginastos mo, including OPEX, including income taxes and interest expenses, merong matitira sa yung 17 pesos. Alright? So that 17 pesos, ito yung pinakakinita na ng company that you can use to distribute as dividends to your shareholders, or spend that money for reinvestment purposes, or to buy another business, or to expand. Now, next analytical tool that we can use is through ratio analysis, and that will be discussed in the next unit. So there are 5 categories of ratios. We will dig deeper into that sa mga subsequent discussions natin. So we have liquidity ratios, activity ratios, stability ratios, profitability ratios, and market ratios. And there are formulas that we use to gauge or measure how liquid the company is. We have 2. We have current ratio, and we also have quick ratio, or also known as acid test ratio. We also have activity ratios. Under activity ratios, you would like to know more about the turnover, collection period, payment period, age of inventory, ayan, total assets turnover. Now, for stability ratios, it talks about the ability of a company to pay its long-term obligations. Kanina yung liquidity, it's about the ability of a company to convert its assets, especially current assets, into cash, right? And the ability of a company to pay its short-term obligations, or ang tawag dito solvency. Now, for stability, it's for long-term naman. May kakayahan ba yung company na magbayad ng mga long-term obligations? And of course, profitability ratio, pag-compute natin ng mga ratios, dito natin na-assess how profitable the company is. If you compute for the gross profit margin, operating profit margin, net profit margin, earnings per share, return on assets, and return on equity, you'll be able to assess the ability of a company to be profitable. And of course, market ratios, examples of the under it are price earnings ratio, market book ratio, dividend yield, book value per share, and PER growth ratio. Ayan, next analytical tool that we can use is, of course, using cash flow analysis. So this is an example of a cash flow statement categorized into 3. We have cash flow from operating activities, cash flow from investment activities, and cash flow from financing activities. So dito pa lang sa pag-analyze ng cash flow, malalaman mo, as I mentioned earlier, the ins and outs of your cash. Okay, the cash receipts and cash disbursements. Bakit at the end of the year, ang increase sa cash and marketable securities, for instance, is $500,000. It's basically because of all these business transactions. Okay, yung mga business transactions lang na may effect doon sa cash fund or sa cash mo. Alright? And last but not the least, we can analyze financial statements using valuation analysis. So there are different approaches that we can use to evaluate the company. And basically, the most important thing about valuation is we would like to know the intrinsic value of the company shares for us to make better informed investment decision. So it's more on the intrinsic value, meaning the book value of the company. Okay? So magkano talaga yung worth ng company as per its accounting records. Hindi kung ano yung perception ng mga tao sa kanya, okay? Kundi ano talaga yung totoong value or worth ng company. So it's very useful, especially for companies liquidating or for companies na gustong bilhin din ng another company. Okay, so they would like to know more how much is the company's worth. Alright, ayan. I hope you're learning so far. Next, let's proceed to types of financial statements. So financial statements report the historical performance of a company. So pag sinabing historical performance, that means to say, meron ng business transaction na nangyari. Okay? You don't include in your financial statements those business transactions that have not transpired yet. Okay? So for example, yung company, they acquired machinery and equipment. So that's already historical, diba? It's either they paid cash or on credit, but you already report that in your financial statements because that's already historical. Nangyari na yung business transaction. Okay, so for example, may plano pa lang na bumili. Okay, so you don't include that in your financial statement. Although you can include that sa notes mo, for example, yung mga expansion project, etc. But definitely, you don't include that yet in your income statement or balance sheet and or other financial statements. All right? So again, financial statements report the historical performance of a company and provide a basis for assessing the firm's achievements. It's also a good basis, no, a foundation for you to be able to project the firm's future. All right? So there are 4 basic financial statements. We have income statement, balance sheet, cash flow statement, and statement of retained earnings. This is just an overview of the financial statements, but definitely we will discuss them one by one as we go along. Okay, so income statement, it provides a financial summary of the firm's operating results during a specified period. So most commonly, it covers a 1-year period. If it's a calendar year, it ends, okay, on December 31 and any date other than December 31. That's fiscal. Alright? So, ang makita mo sa income statement, of course, is yung revenues and expenses of the company. Now, balance sheet naman, it presents a summary statement of the firm's financial position at a given time. That's why, yung title na ginagamit natin dyan is yung as of. For example, as of December 31, kasi from the very beginning. Alright? Hindi katulad ng income statement na for a specific period of time lang. For example, 1 year. Ang balance sheet, hindi pwedeng for 1 year lang kasi depende kung kailan nag-start din yung mga transactions. Kumbaga, kung meron ng existing cash sa balance sheet mo, hindi pwedeng next year, i-zero mo yung cash mo. Alright? Kumbaga, carry forward yan the next year. Okay? So, cash flow statement naman is a summary of the cash flows over the period of concern. So it basically provides an insight into the firm's operating, investment, and financing activities. So sa cash flow statement, ang makikita mo lang dyan are all transactions that affected your cash. All cash receipts and cash disbursements. And last but not the least, we have statement of retained earnings. It's an abbreviated form of the statement of stockholders' equity. It basically reconciles your net income, and if there are cash dividends paid, you deduct it from your retained earnings for you to be able to know the retained earnings at the end of the year. Okay, so elements of financial statements. So let's start first with income statement. It is now known as a statement of operations. Okay, so it reports the results of operations or performance of an entity for a given period of time. It basically records the revenues and expenses of a business over a period of time. What is the equation? Net income is equal to revenue minus expenses. Alright, so ang makikita lang natin sa income statement are the revenues or income of the company and expenses. So to get the net income, revenue deduct all the expenses. Now, this is an example of an income statement from Bartlett Company. So this is the right heading. The first line should be the name of the company. The second line is the name of the financial statement. Okay, what type? And the third line, okay, would be the period. Okay, the reporting period. So it's an income statement. So for the period ending June 30, 2016. That means to say, ang start ng reporting ito, 1 year. So it's from July 1, 2015 up to June 30 of 2016. Now you can see here the basic presentation. Sales revenue, deduct cost of sales is equal to gross income, less operating expenses is equal to your operating income, less interest and taxes is equal to your net income. So makikita mo yung tatlong major income. We have gross income, operating income, and net income. Alright? So this is how we present it. So sales revenue, ito yung benta. Tama? Ilan ang nabenta mo at magkano? And then, cost of goods sold, ito yung pinuhunan mo. Ang matitira sa'yo, $986. Okay? Now, operating expenses, you'll have to classify if it's a general and administrative expense or a selling expense. So, the total of which is yung operating expenses mo. So, the result is operating profit. I-minus mo yung interest expense, and the result would be net profit before taxes. Okay? In some presentation, it's simply earnings before interest and taxes. And then after that, saka mo deduct yung interest expense and taxes. So the result would be earnings after interest and taxes. So yun na mismo yung iyong net income. After madeduct mo na lahat, puhunan, OPEX, taxes, so net income. Now, if you deduct preferred stock dividends, ito ay binibigay sa mga shareholders na preferred. From net income, once you deduct preferred dividends distributed as dividends to preferred shareholders, the result would be earnings available for common shareholders. Ibig sabihin, ito yung income na paghahati-hatian ng mga common shareholders. Alright? So to understand it better, ayan, sales revenue, paano mag-compute ng sales revenue? It's very simple, di ba? Kung ikaw ay nasa business, nagbebenta ka, you have to know, okay, how much will you be selling that item? And of course, ilang item yung ibebenta mo. So, selling price times sales unit. For example, ang selling price mo is 100 pesos and 10 ang naibenta mo. So, that means to say your sales revenue is 1,000 pesos. Tama? Now, babawas natin yung puhunan. Ang tawag dyan, cost of goods sold. So, that would include the raw materials that you used when you produced or created the product. We also have direct labor, yung nagtrabaho dyan para matapos yung produkto mo and other overhead. Okay? So, yan. And then, of course, ibabawas mo din yung mga operating expenses. We should classify them into two. Ayan, so general and administrative expenses, and of course, selling expenses. What are the examples of general and administrative expenses? We have salaries of employees. We have utilities, research and development, training of personnel, office supplies due, so that's expense, rental expense, so those are example. And selling expenses naman, these are expenses incurred, okay, to promote, advertise, market, ayan, the product, and even salaries of salesmen, yung mga nagbenta. Okay? Now, let's proceed to the elements of your balance sheet. Ano ba yung balance sheet? It's also known as statement of financial position. It reflects, as of a given date, the assets, liabilities, and equity of the business enterprise. And it basically shows the three categories. We have assets, liabilities, and equity. So the formula is assets is equal to liabilities plus equity. And your assets should always be equal to your liabilities and equity. So if your assets is 1 million pesos, okay, so the combination of your liabilities and equity would also be 1 million pesos. Kaya nga sila balance, di ba? Balance sheet. All right, so this is an example of a balance sheet, Bartlett Company. The first line, put there the name of the company. Second line, this is how you do it. This is the name of the financial statement. And of course, the third line would be as of June 30. So, kailan nagsimula yung reporting period? As of. So, from the very beginning, kung kailan nag-start yung company, if it started in January 1 of 2010, so basically all those accounting transactions that transpired since then will be part of this. And it's categorized into three. We have assets, liabilities, and stockholders' equity. So I want you to become familiar with the components or elements of your assets. So we have cash. Definitely, hindi mawawala yung cash or cash equivalents. Marketable securities. Okay, so these are short-term investments. We have accounts receivables. These are collectibles. Ayan, we have inventory. So you have your total current assets. And also yung property, plant, and equipment. Example of which are your land and buildings, machinery and equipment, furniture and fixtures, vehicles. And if you notice, okay, nagbawas siya ng accumulated depreciation because naluluma yan over time. So we have to account for it. So binabawas yung accumulated depreciation to get the book value of your fixed assets. And then, okay, total current assets plus, okay, your net fixed assets, Okay, that will be your total assets, 3,597,000. Okay, pag sinabing net fixed assets, nakabawas na po yung accumulated depreciation doon sa inyong fixed asset. Now, for liabilities, that would include accounts payable, notes payable, accruals. Yan, we get the total current liabilities plus long-term debts. So the total liabilities is 1,643,000. And of course, stockholders' equity, we'll have preferred stock, common stock. This is for corporations, paid in capital, retained earnings. So total stockholders' equity is 1,954,000 plus the total liabilities is equal to your total liabilities and stockholders' equity, 3,597,000, which is balanced doon sa inyong total assets. All right? Yan. And of course, as we all know in your accounting subject, you have already understood that assets are normally debit balances, and of course, liabilities and stockholders' equity are normally credit balances. Okay, for balance sheet, okay, assets, what are assets? These are things owned by the business. These are resources received which have future economic benefits. Okay, may use siya. Assets are categorized into two. We have current assets and non-current assets, or also known as property, plant, and equipment. And we also have other assets. Current assets would include cash, yan, marketable securities, accounts receivables, inventories, and prepayments. So cash, that includes your coins, currencies, checking accounts. Okay? Marketable securities naman, these are short-term investments. It includes treasury bills. Okay? So if the company has excess money, pwede siyang magpautang sa government. Pwede mag-invest ang company sa mga commercial papers and of course, certificate of deposits. Accounts receivables, what are these? Ayan, these are promises received from customers to pay for goods and services later. So if, for example, meron ka mga products na naibenta, hindi naman lahat ng naibenta mo ay cash basis. Tama? So ilan sa mga produktong naibenta mo ay babayaran pa sa'yo sa mga susunod na araw. So pwedeng 15 days after, 30 days. So that will be part of your accounts receivable. These are sales on credit. All right. Now, what about inventories? These are example of which are raw materials, work in progress, finished goods, and your office supplies. That will be part of your inventories. Okay. And prepayments naman, this expires with the passage of time. Example of which, prepaid rent, o nagbayad ka ng rent in advance. Okay. So ina-amortize over the years, meron kang prepaid insurance, ayan, so prepayments ang tawag doon, that will be part of your current assets. Now, ano naman yung mga non-current assets? Yan yung mga property, plant, and equipment. So example of which, land, building, machinery, and equipment. Example of machinery and equipment, yan yung mga printers na ginagamit sa office, computers, aircon, and also yung mga furnitures and fixtures like tables and chairs na nasa loob ng opisina. Now, take note that in the presentation of your property, plant, and equipment, normally, you deduct the accumulated depreciation expense and you present it in the balance sheet as net. Okay? So for example, machinery and equipment minus accumulated depreciation equipment, that will be the book value of your machinery and equipment. Or you simply present it machinery and equipment, comma, net. Diba? So there are two ways how you present it in the balance sheet. Okay? Now, other assets naman, these are assets that cannot be classified as current assets or fixed assets. Okay? So mostly, these are long-term prepaid expenses, refundable deposits on long-term leases. For example, nag-release yung company nyo. So meron kayong mga deposits and organization costs. Okay, na nag-umpisa ang business, of course, meron yung mga organization costs na ina-amortize over the years. So that will be part of your other assets. Now, liabilities naman, these are amounts owed by the business to others. These are obligations or promises given to others. Ayan, company nyo naman ang may utang. Alright? So example of which, accounts payable, notes payable, or those, for example, bank loans payable within a year or within the normal operating cycle of the business. And of course, pag mga notes payable naman, long-term and mortgage payable, that will be part of your non-current liabilities. So kung yung total assets, meron siyang current assets and fixed assets, ang liabilities naman, merong current liabilities, and non-current liabilities are also known as long-term debts. Alright? So pag sinabing current liabilities, these are obligations or promises, okay, for the goods and services that your company have purchased on credit. So kayo yung may utang, babayaran nyo within a year. Okay, what about non-current liabilities? These are naman written promises to pay debt of more than 1 year. Okay, and last but not the least, under the balance sheet, so you have your stockholders' equity. Basically, these are claims by owners of stock on the resources of the business. So equity talks about ownership. Okay, so for example, kasama dyan yung preferred stock, common stock, treasury stock, additional paid-in capital, and retained earnings. Pag sinabing preferred stock, this is very common, no? Yung preferred stock and common sa mga corporation. So preferred stocks, ayan, sa preferred stock, if you are a shareholder of a preferred stock, you are entitled to receive dividends. Common shareholders naman, it represents the amount invested by owners of the business in exchange for stocks in the company. So in the stock market, okay, what is common stock. So there are many common shareholders. Well, if you're a preferred stockholder, you're basically after the preferred dividends. Okay, now for common stockholders, aside from the potential dividends, you're also entitled to stock price increase or what we know as capital gain. So hindi ka lang pwedeng sa dividends kumita but also through capital gain or capital appreciation. And on top of that, okay, merong mga rights and privileges ang common shareholders that are not present to preferred shareholders. Example of which, common shareholders have the right to vote, they have a say in management, and of course, retained earnings naman, these are accumulated earnings of the company over the years. So meron tayong tawag na restricted retained earnings and unrestricted retained earnings. Dito nakikita ng company kung may kakayahan ito na mag-distribute ng dividends or profits ng company. So if it's restricted retained earnings, definitely that money will be used for the other objectives of the company such as expansion, ayan, or reinvestments. Pero pag sinabing unrestricted, ito yung free portion. Ito yung portion that can be distributed to all its existing shareholders. So that's the end of it. I'll see you next meeting.